Carl, you're looking. Are you on CNBC today? What time do you go on?
No, I don't kiss ass like that. Sorry.
Well,
I got to go get some of that free moolah.
It's the Cinderella story. I'm ready for a little golf today. It is Friday.
Nice.
It's summer, and the easy money's been made. Everything, one asset has moved together. Euro, ES, gold, oil. They all sold off in concert here. G8 meetings firing up. A lot of things going on. A lot of, we keep talking about them here. Tell us your thoughts. What do we have here going into the weekend?
I'll just simply put it level-wise. We broke that 90 quarter in ES last week, and we did break it on impulse during regular trading hours. So to me, that meant we were going lower.
Yeah,
I guess
and we held it, and we closed below it for 3 days now.
Yeah, and we have been closing below it. And today we took out 74 quarter, which is another level, which means to me in my mind we're going to see 58. But ultimately, I think we're going to test 43 to 46, and there's a possibility that we're going to see 1181-ish.
Yeah. So, so people know, these are real simple levels. Everybody pull up a 4-hour chart. You can go back, you go back to basically late last summer, 9 months, and you've got the low of March right there at 1260, as you said, Carl, and then 1180. On the SPX, I'm just talking SPX now. It goes back to again the fall, late fall, November, October time frame of 10, when we last touched during the elections there, the low of about 1180. So those are the next levels. This is a sell the rip market now. We put in 3 successive attempts at highs. Going back to the fall there, the early spring here in February, we fell off, and then we pushed again to 1370, and it's been weakening every little rally here, and if you're buying the dips, it's a tough market to buy dips. I think you have to kind of flip your head around, as I have today, just to make a point.
Well, I was going to give you a headline for today. The only dip I'm going to buy is Copenhagen. So
I like it, and but that's true. It's a different market, and if you like the charts that go up, flip them upside down so they look like they're going up.
Monitors upside down trades the same way.
Trades the same way, and really, I think it's a great point we should make here. Is if you have trouble trading one way or the other, flip the charts upside down, and until you find a chart that looks good to you, and trade it that way, and. I think you have to look at anything right now as until we make a new high in anything, any asset class, and you see it in Sina, you see it in all these Lulu, Open Table. These things are broken. And let's talk about oil here a little bit. It's broken. It went to 115, it touched down to 95.
Yeah, it's getting broken. Yeah.
A 20-point move is a 20% plus move already on crude. So it's broken. Again, technically speaking, I'm just talking technicals. That all changes if you get back to a high, but everything is broken right now. So
this market is running on free moolah, and we're running out of free moolah.
Yeah, what do we have? Maybe 10 days left of QE? 2?
And the economic data is turned ahead of time, so that's not a good thing for doubles. So,
yeah.
I mean, it's pretty simple stuff. Bernanke was not lying to you that QE2 was coming to an end a month ago.
Yeah, he still has not gotten
He
the
might
approval.
lie to you about a lot of other things, but he wasn't lying to you about that.
No, and as I said, you and I keep talking about this, but they've got to go down a 10, 20% fall from the highs to get that QE3 even on the table. So 1370, 10% gets you 137, 20% gets you 274. So you're talking possibly 1100 to 1180 is that realistic area that I think we still could see as we keep touching on.
I'd love to see your 20 to 40 oil, but we can agree to disagree. Okay, that's fair enough, right? So
yeah, no,
I just don't see any way that'll happen. But
to me, it's a cheap flyer bet. I was buying it.
No, you'll be in the moolah on those things.
I was buying these puts, the $40 and $60 level when we were trading about 110, 112. So we'll see if they.
Yeah. I get it. I get that.
And I think it's political. It's nothing more than a political bet that the powers that be want Bama to be back in there, and the only way that he can do that is to help the only way they can cut. First of all, they're not lending money to the consumer, so it's not. I mean, the average consumer, Carl. Let me say that The guy who's not making...
I'm an average guy, buddy. I'm an average guy.
Yeah. Well, the guy who's not, the guy who's, you gotta, if you're making $500,000 plus a year, you're not the average guy. So the point is, those guys are getting loans, but nobody else is. Nobody's out there getting easy, new home loans. Nobody's out there getting, So the point is, this is going to continue, and the only way they're going to make the consumer feel good is by putting cash in their pocket, by lowering that dollar price at the pump. And it's stuck here at 4 today. Absolutely. It's got to go lower. It's the only way the guy gets reelected.
Well, I tend to agree with that, but okay. We'll see.
Yeah.
We'll see. I think we're going to have abnormally high gasoline. I don't call it.
And if he gets reelected, at $4 gas, then we really
that would be something, wouldn't it?
Then we really live in a bizarro world.
How about that? Yeah.
You're gonna go get that free moolah at the bank today, and what else we got going on?
That's really it, man. It's raining here, so I can't engage in those golf activities like you. So probably a little more house stuff on tap for this weekend, and then we start having fun in about another week and a half.
All right, we'll see you on CNBC here in the next hour.
Oh yeah, right.